Hey everyone, it's Nick and Leo with the Drisslows Happy Home team with the latest update on what's going on in the Seattle real estate market for August 2020. And it is a big one. We officially saw home prices hit the highest record price ever, so of all-time highs. And so you may have been seeing some different headlines out there like this, talking about record prices and people going to the burbs and prices soaring. Pandemic, what pandemic? Seattle area home prices keep rising fast. Wall Street Journal talking about suburban home prices are rising, but so are urban areas. And so what does that mean for kind of our market locally? Well, this kind of shows you what's happened over the last year for the 4-county area. So King County is up over 7% year over year. Just hit 727,500 at the highest price. Previously was May in 2018. Pierce, Kitsap, and Snohomish County are all up nearly double-digit appreciation, some in double-digit appreciation. And so what's going on? Why are prices doing this? So this is kind of looking at King County. And the biggest indicator right now is just that inventory is so low. We're 41% lower, fewer homes for sale now than we had this same time last year. And you can see kind of what happened was this blue line shows you the new listings that are coming on the market each month. And in April, kind of March, April, we had this drop off of inventory because it was right when COVID was brand new and that initial shock and awe. We weren't sure what we could do, couldn't do. And so you just never had a replenishment of inventory for about 2 months. In the meantime, demand never really let up, and so we're still kind of struggling to get caught up with demand because the inventory is not keeping up. Now, we have seen inventory increase a bit. It's up 20%, 26% year over year. But pending sales are up even more, 31% year over year. So with that, what we've been seeing with the market is that your average days on market right now is 22 days. Your average list to sales price ratio is 100%. So homes are pretty much getting full price on average. And you have your median single family home price there kind of cresting up near 730,000. We're trying to find, inventory levels that could reflect anything close to this, because all the articles kept talking about this is the fewest homes for sale in a decade and the highest number of homes for sale or homes gone pending in a decade. And so I was trying to look back through historical reports to verify that. And I had to go all the way back to 1993. That's as far back as they cover monthly reports. So this is a good old scanned copy of our MLS report from 1993. Back then we actually had about 10,000 homes for sale as opposed to 4,000 now. But just was interesting to kind of look back historically. So other reasons that inventory is tight, the eviction moratorium for rental properties and tenants has been extended through October 15th. So if you have landlords that own rental properties that maybe would like to sell them and tenants do not wish to move out, they can utilize this time to kind of extend that. So you do have a number of investors that maybe are looking to liquidate the properties that can't. So that's kind of keeping inventory somewhat tight in that market. Mortgage rates right now are still under 3%, so hovering near all-time lows. That's been a significant driver in demand. And so with that, you've seen mortgage applications are up 22% from a year ago. And mortgage refinance applications are up 84% year over year. So, we're still seeing the market being very specific to sub-markets. Some areas are still very hot and frenzied. Others are starting to get a little bit of that summer cooling effect. But I anticipate we'll still see very tight inventory continued on to make it a potentially competitive market. So if you have any questions about what would be the best game plan for your specific goals, feel free to call, text, visit us online, happyhometeam.com.